Trade and investments is a critical factor in the growth equation. It supports economic activity, creates new businesses, and generates jobs for our people. I would have wanted to say that our exports and investments were insulated from the global economic downturn, but they were not. However, in the second quarter, merchandise sales grew by 17.4%, indicating that the drop in exports may have bottomed out, as supported by the double-digit growth in May and in June on a month-on-month basis. Available data from Bangko Sentral showed services exports posted a 7.1% growth from $2.5 billion in the first (2008) to $2.7 billion in 2009. The United States remained our top export market, followed by Japan, China, the Netherlands, Hong Kong, Germany, and the rest. New niches for innovative Philippine products and creative industries generated $250 million of export orders for the first 2 quarters of the year. The Export Support Fund that was released in May had directly assisted exporters in time of the crisis, and it had approved 15 projects. The EDC had approved 15 projects, and currently is fast-tracking the processing of more project applications. Meanwhile, approved investments in the second quarter grew by 243%, the bulk of which went to the country's very strong sectors, particularly electricity, gas, water supply, IT services, and manufacturing. Big-ticket investments in the power industry are in the renewable and green sector, boosted by the passage of the Renewable Energy Act, and consistent with the country's thrust to attain energy self-sufficiency in the next decade, truly relevant in light of the recent disasters that descended upon us due to climate change. Renewable energy is proving to be very attractive, with several firms eyeing some $1 billion worth of aggregate investments in the local biofuels industry. We have the first ethanol plant to rise in Leyte. A wholly owned Filipino company, the Colorado Shipyard Corporation, had made its first international vessel sale to an Australian firm, a salute to the Filipino workmanship and the local shipbuilding industry ability to move up the value chain and compete with more industrialized economies. Meanwhile, Coca-Cola has embarked on its expansion program, which we were informed would reach the $1 billion mark. In Clark, the Texas Instruments $1.5 billion new assembly and test facility is now operational and currently ramping production. And Hanjin Heavy Industries continue to infuse additional capital in its shipbuilding facility in Subic. All this over and above our continuing drive to strengthen, intensify, deepen, and expand ongoing efforts in market diversification, export capacity enhancement of enterprises, empowerment of exporters through procedural and governance reforms, and proactive rendering of assistance to address their technical and resource requirements. We continue to heed the call of the private sector for proactive, concerted international promotion efforts supported by a regulatory environment that cultivates the country's competitiveness and attractiveness as a destination for foreign capital. I continue to support the need or the call of the international business community, the need for us to take a look and amend the economic provisions of our Constitution. We need to address the needs and dynamics of a highly competitive, globalized economy. I could see a few eyebrows raised when I mentioned constitutional change. And if I may be allowed, just to assuage the fears of a deeper political, economic agenda when it comes to changing the Constitution, I am prepared to nominate Secretary Gary Teves, not just as Vice President, but President of a Constitutional Convention. And I think that is enough assurance that we will focus on the economic provisions of a constitutional change. If that is not enough, if Secretary Teves would have other political plans to pursue, perhaps we can ask the venerable former Prime Minister Cesar Virata to help us amend the economic provisions of the Constitution. We are implementing various initiatives